explain your inclination to start an exchange. Why now, and how do you compete with the bigger exchanges, the Coinbases, the Binances of the world?
Sure. So we started doing activity in blockchain back in 2018. We were the first to originate loans on chain, and that year the first to warehouse them, did the first securitization in March of 2020. And last year, the first AAA rated securitizations of blockchain assets. And in doing so, we've done about $30 billion of blockchain transactions native to the lending ecosystem that we have. One of the things that's always bothered us about crypto, crypto is necessary for blockchain to work. So you have to have Bitcoin for the Bitcoin network to work. You have to have Ethereum for the Ethereum network to work. But it's predominantly trading in centralized exchanges. So there's a little bit of a paradox there. And if you look at the Binances and the Coinbases and up until recently FTX, the logic has always been, well, look, I can't commingle Bitcoin and Ethereum. They're on different networks. So just I'm the exchange, give me the coins, and then you can trade on the exchange. But when you do that, you're basically trusting the exchange. And the whole premise of blockchain is not to have to trust anything. It's to truth over trust. And so we think it's a long time coming for a decentralized custody exchange construct where you don't have exposure to the exchange operator. And so one of the things that we're doing in early April is standing up a true multi-party computation wallet structure. So effectively an MPC wallet to support a decentralized exchange initially for crypto, but we're going to bring our lending business, our asset-backed security business on there. And ultimately, we hope to be able to get public equity on there as well. We think it's a necessary evolution of the market after the bankruptcies that we've had.
Well, explain that a little more. Why is this an opportunity for you now, given the fall of FTX? Do customers move over to you? Haven't they already moved over to other exchanges?
So I think it's, I have a lot of sympathy for the folks that were involved with FTX and Celsius and Voyager and other situations. And unfortunately, they were severely negatively affected by these bankruptcies. But I think there's an opportunity to galvanize the community off of that. And in particular, it's been public that we've been involved in trying to restart the FTX exchange. Whether or not that happens at this point, I think what is likely to happen is for us to do something with the FTX community. So notably, to be able to provide a way that they can have ownership in figure markets and participate in that exchange as we build it out. And it actually provides a mechanism for us to approach the idea of public equity.
Well, speaking of public equity, I certainly understand the opportunity for an exchange for crypto-backed assets, securitized assets, public equities. But when you say exchange of everything, do you really mean exchange of everything? Like, are you getting to the point where you could see being a competitor StockX, for example, and being a marketplace or an exchange for physical goods too?
Whether it transcends into physical goods, it definitely will impact financial assets. And there's an enormous opportunity for this, in particular around cross-collateralization. So one of the key growth areas of FTX before it had its problems was equity perpetuals. And the idea of being able to put up Bitcoin as collateral to trade Tesla, there's a huge appeal to that. And so by delivering cross-collateralization, we think we're opening up a significant opportunity to support not just crypto, not just fixed income, but even public equity on a common platform.
Do you think the sting of the burn from FTX is gone? Has it healed at this point? Enough for a new product to come along to build trust in that same group of users?
So I'm very surprised that the centralized exchanges still exist and exist with such market dominance that they have because of what happened with FTX. I think that the industry would realize taking trading, custody, and clearing under one roof introduces huge opportunities for risk. And so I think people would like to lean into something that is decentralized custody and be able to be more to the ethos of blockchain, which is, again, trust, not truth.
Let's do a little bit of a thought exercise here, because one question I've been asking is, if you are trying to build a new exchange and other exchanges are also coming to the surface even more, the idea of DeFi becoming more prominent, exchanges that are not the typical NASDAQ or New York Stock Exchange, what is the point of an ETF? The people who are buying into Bitcoin ETFs today, 5, 10, 20 years down the road, would they find themselves disappointed?
I don't know if they're going to find themselves disappointed. I mean, obviously, Bitcoin's been on a torrential rally. It took a little bit of a breather today, despite the inflation print that we got. I think the benefit of the ETF is you have a tax arb in the ETF through the creation and destruction of units, and that is a significant benefit to investors. But it is orthogonal to the thesis of blockchain, right? The idea that we're going even more centralized on the structure versus the idea of a decentralized play. And I think we're working with partners, significant market leaders like Jump Crypto, for example, in creating very deep liquid two-way markets, bringing the best technology into the marketplace, and it provides a foundation to do something very disruptive. And that disruption, a lot of times people say, oh, you're going to get rid of DTC or Deposit Trust Corporation. Sure, you don't need a centralized registry with blockchain. And they say, oh, well, you're going to get rid of the NASDAQ or the NYSE. Well, you don't necessarily need those centralized exchanges with blockchain. But the big disruption is you don't need the introducing broker. You don't need the Schwabs or the Robinhoods or the TDs because you just attach your wallet to the exchange and trade. That level of disruption makes a lot of people nervous. That's why you have a lot of resistance to what's happening, but it's going to happen.
Well, it's interesting. The NASDAQ or New York Stock Exchange, you're looking at kind of quasi-regulatory bodies here. How does what you're building fit into the existing regulatory regime in the United States?
Sure. So one of the benefits that we have is we have an alternative trading system that is very unique in that it allows us to trade blockchain native securities that can bilaterally self-settle. And so it's the only ATS I know of that can do this effectively consistent with this whole blockchain ethos and supporting decentralization. So the objective with using blockchain isn't to circumvent regulation, it's to adhere within regulation. But I think there's a framework there that we can bring some significant innovation even under the purview of the SEC.
30 seconds here, Mike. IPO for the lending business. How soon can we see it?
So we are very content with the progress in our lending business. Obviously, I can't talk anything about the IPO per se, but the figure is doing very well.